You open the app. You transfer $100. It's gone from checking before you've even finished your coffee. It's the same $100 you almost spent on something else this week, a delivery order you didn't need, subscription you forgot you still had, a treat yourself purchase that felt urgent on a random Tuesday and completely forgettable by Thursday. You know that money. You felt it disappear 100 different ways before. This time it disappears into something else. Nothing happens. Nothing is supposed to happen. $100 sitting inside an index fund looks exactly like $100 sitting in a drawer. A number on a screen, nothing more except it isn't the same, and you won't understand the difference for years. This isn't a story about getting rich overnight. It's not a story about a stock tip, a side hustle, or a lucky break. It's a story about what one small, boring, repeated decision turns into when nobody's watching, including you. Month 1 through 6. The part with nothing to say. There's no real chapter here. That's the point. You set up the transfer once and then you stop thinking about the decision. It just happens now, quietly, on the same day every month, the same way rent leaves your account, the same way a phone bill does. Except this one comes back to you eventually, even though right now it just feels like money leaving. 6 months in, the account shows a number a little bigger than what you put in, or a little smaller, depending on the week you happen to check it. It doesn't matter which. You haven't built a number yet. You've built a reflex, the breathflex of not needing to see visible progress in order to keep going. This is the exact stretch where most people quietly stop. Not with a dramatic decision to give up, with a skipped month that becomes 2 skipped months, then a login that never happens, then an app buried on the 3rd page of a phone screen, forgotten between a game you don't play anymore and a coupon app you downloaded once. The habit dies the same quiet way it was born, no announcement, no funeral, just absence. You don't quit. Not because you're more disciplined than the people around you scrolling past 100 ads for things they don't need. You just decided once that this particular $100 doesn't get a vote every month. It just leaves, the same way it always does, except this time, it's going somewhere that remembers it. Year 1. The first real number. 12 months of $100 is $1,200 put in. The account might read a little above that, a little below. Markets don't owe you a straight line, and they never apologize for the weeks they take from you. The number isn't the actual lesson of year 1. Here's the real one. You tested 12 separate times whether that $100 was actually load-bearing in your life, whether skipping it would collapse. Something important. It never did. The money always found somewhere else to come from, or the thing you thought you desperately needed, you realized you didn't. Think about how many things in a year quietly convince you they're urgent. A slightly nicer version of something you already own. A night out you'll forget the details of within a month. A purchase made at 11 at night that felt necessary in the moment and pointless by morning. You said yes to fewer of those this year, not because you became a different person, but because the $100 had already left before those decisions ever showed up. That's the actual asset you built in year 1, not the account balance, the proof that the $100 was never really yours to spend in the first place. Year 2 through 3. When the market tests you somewhere in here, the market drops. It always does eventually, and it always seems to pick a stretch that feels personal for completely unrelated reasons. A rough month at work, a breakup, a year where everything else already felt shaky. You watch the account shrink. Not dramatically at first, just enough to feel it somewhere behind your ribs the first time you check and see red instead of green. The number that took 2 years to slowly build loses a visible chunk of itself in a matter of weeks, and for a moment, the whole thing feels like it might have been a mistake. You scroll past headlines that make it feel worse, words like crash and correction and worst month in years, written by people who need you to keep clicking, not people who know anything about your specific $100. Your group chat has an opinion. Someone always has an opinion. Most of them haven't started, and somehow they're the loudest about when to stop. You do the only thing this strategy has ever actually asked of you, nothing dramatic. The transfer goes out on schedule, same as always, except now it quietly buys more shares than it did a month ago because everything is on sale and almost nobody in your life will notice that. This is the good part. Nobody claps for this. There's no moment of triumph, no highlight reel. You just keep feeding the account through a stretch where it looks, on paper, like the whole plan failed, and months later, when the market recovers the way it almost always eventually does, you realize the shares you bought during the drop are quietly worth more than anything you bought before it. Year 5. The shift nobody tells you about. 5 years of $100 a month puts somewhere around $6,000 into the account, out of your own pocket. Depending on the years the market gave you, the balance sits meaningfully above that now. Not life-changing, not something you'd casually mention at a dinner, but undeniable to you in a way it wasn't before. Here, what actually changed, though, and it has almost nothing to do with the number itself. You check the account differently now. You used to open the app braced for disaster, the way you check a text from someone you're not sure is still upset with you. Now you open it out of something closer to curiosity, the way you check the score of a game you have a small, comfortable interest in, not a desperate one. That shift from fear to curiosity is the actual turning point in this entire process, and it happens quietly, with no ceremony, somewhere around year 4 or 5 for the people who make it that far. Nobody posts about it. There's no milestone graphic for stop being scared of your own bank app. You also start noticing a distance opening between you and some people around you who aren't doing this. Not because you're better than them, and not because you'd ever say that out loud, but because you've made a few hundred small decisions by now that they haven't. And small decisions, repeated quietly, add up into genuinely different lives long before either of you can actually see it happening from the outside. Year 10. The machine starts pulling its own weight. A decade of $100 a month is $12,000 contributed, total, across 10 years of the same unremarkable transfer. At a long-run historical market average, the account has grown well past that figure. Not dramatically, not enough to quit your job over, but the gap between what you put in and what you actually have is now wide enough that you notice it without trying. Somewhere in this year, the market itself contributes more in 12 months than you did with your own 2 hands, working, saving, transferring. Your money is now making money at a pace that genuinely rivals your monthly deposit, not because you got smarter about picking investments, but because 10 years of patience finally has enough mass behind it to start moving on its own. You think back to who you were when you started this, the version of you deciding whether $100 a month was even worth the effort of setting up. That version of you didn't know this year was coming. That version of you was just trying to survive a normal month without going backwards. This is the part every finance book tries to explain and never quite lands, because it isn't really a math lesson, it's a lived one. You don't fully believe it until you watch it happen in an account that has your own name on it. Year 15. The ordinary years add up by now. This has stopped being a decision you make every month and become something closer to a fact about you. The same way some people are someone who goes to the gym, or someone who calls their mom every Sunday. You're someone who feeds this account. It's not a personality trait you'd list on a dating profile, but it quietly shapes more of your life than almost anything you would list. 15 years of $100 a month is $18,000 contributed. The account, compounding through good years and rough ones, through a couple of downturns you've stopped being afraid of, and a couple of good runs you've stopped getting overly excited about, has grown to a number several multiples beyond that. Somewhere in these years, life happened the way it happens to everyone, a job change, maybe a move, maybe a relationship that ended or one that started, a year that was harder than the others for reasons that had nothing to do with money. The $100 kept leaving anyway, quietly, in the background of all of it, the one constant thread running underneath everything else that felt chaotic at the time. Year 20. The curve bends 2 decades in. You've contributed roughly $24,000 out of your own pocket, spread across 240 individual, forgettable transfers. The account, compounding the entire time without asking your permission, has grown to several multiples of that number. Here's the part that's easy to miss if you're only watching the total. The growth isn't a straight line anymore. It's curving upward, and the curve is only now, after 20 years, becoming genuinely visible. In year 1, the market added you the equivalent of pocket change. In year 20, it's adding more in a single 12-month stretch than you contributed across several of your earliest years combined. You are, at this point, not really the main contributor to your own account anymore. You're barely a passenger. The machine you built with spare change 20 years ago, back when it felt almost embarrassingly small to bother with, is doing most of the driving now, and it doesn't need you to do much except keep showing up. Year 30, what $100 actually bought 30 years of $100 a month is $36,000 out of your own pocket, total, across 3 full decades. At a long-term historical average return, the account has grown into 6 figures. A number so far past what you actually contributed that the two barely feel related to each other anymore. The way a grown adult barely resembles the baby photo their parents still keep on the wall. The difference between what you put in and what you now have wasn't earned at a job. It wasn't inherited from someone else's decisions. It was timed perfectly or predicted or gambled on with some clever move you made at exactly the right moment. It was grown, slowly, by every single month you didn't stop, including the boring ones where nothing seemed to be happening, including the scary ones where the number briefly went backwards, including the ones where $100 felt like it mattered too little to bother defending against everything else pulling at it. The part where you look back, if you could show the version of yourself from year 1 this exact number, they wouldn't believe it, and honestly, they might not even care that much, because year 1 you was mostly just trying to figure out if this was even worth the hassle. That's the strange thing about this entire process. It never feels significant while it's happening. Not in year 1, not in year 10, arguably not even in year 20. It only becomes obviously significant in hindsight, looking backward at a long line of unremarkable months that individually meant almost nothing, and collectively meant almost everything. The point this was never really about the $100. Most people are waiting for a bigger number before they start, a raise that finally arrives, a bonus, an inheritance, some future moment when it will finally feel worth doing. That moment doesn't reliably arrive on its own schedule, and when it does arrive, it usually arrives alongside the same habit of waiting that delayed everything in the first place. The lifestyle quietly expands to meet the new number, and somehow there's still nothing left over to start with. The person who starts small and simply never stops, and the person who's still waiting for the right amount to begin, end up in 2 very different places decades later, not because one of them was smarter or luckier, but because one of them gave time something to actually work with, and the other one kept giving it nothing at all, one delayed month after another. Time doesn't care how much you hand it. It only needs you to keep handing it something on schedule without fail for longer than feels reasonable. You gave it $100 every single month, and you didn't stop. /CTA if this changed how small you think $100 actually is. Subscribe, because next week we're breaking down what changes if that same $100 goes into a retirement account instead of a regular one, and why that one single choice quietly reshapes your entire tax bill for decades without you noticing until it's too late to fix. Drop a comment below. Would you start this today, or are you still waiting for the right amount to finally feel worth it?